Going over the trades on the day, getting most of yesterday's losses back, plus 17.25 on the day. Beat the hypotheticals a little bit, and we're about in a 3.5% off of our last equity peaks on August the 8th on an end of day basis. We are up on the month, quarter, and year, and so week we are down less than 1%. Going into Friday's trade, we had about 5 out of 6 days in a row that were down days, and today was an up day. So bringing Thursdays back with the downtrend, capturing the short trades, and tomorrow is Friday. So Thursdays and Fridays were the old pattern that mean reverted towards Mondays through Wednesdays. Were hot for a while now. Maybe Thursdays through Fridays. It's hard to trade. It's hard to pick the day of the week because it'll jump around on you. But trying to lock in on that, and so sometimes we get the resolution trade on Fridays with a nice trend. Be interesting to see if we get a big counter trend bounce or some more selling. Let's go over the market and the trades on the day. I want to go over some of these indicators that we have, and this is VSD, keeps track of the volume throughout the day. Red on Tuesday, started out blue, ended up red on Wednesday, completely red today. End of day midday prop up, end of day prop up always makes it challenging. At the end of the day it looks smooth, but intraday it's a little more turbulent than it looks like on the chart. Yesterday we had this turbulence in here, today we had this turbulence in here, and then the end of day turbulence. And so let's look at the tick count trend indicators. So more red than we've seen them in a while, and so 3 days in a row just red leads the way, 3 days in a row. We haven't seen this in a while. And the Nasdaq, I think, is approaching minus 10% off its highs, the recent highs. So about 9% actually, 9% off its most recent highs. Be interesting to see if we get some accelerated or a bounce in this direction tomorrow. And these counter trend rallies can be huge. It's interesting. What's interesting to note is the bearish fundamentals, things like 16 months in a row where economic leading indicators are declining. This is the longest this has been. That's the most consecutive months for leading economic indicators to decline, where we haven't had a recession and the market's just gone straight up in the midst of declining leading economic indicators, and bonds are selling off. Bonds took out the October lows. So it was interesting to see. Here's a chart of the US 30-year bonds inverse relationship with interest rates and the direction of the bonds. It took out the October lows, and it went up. The bonds trended higher into the beginning of the summer. Overall, this blipped down and then trended higher overall from October, and the stock market did as well. And the stock markets continue to go higher while the bonds have rolled over, which indicates higher interest rates. Mortgage rates are going up. And here's another thing. I want to do the daily chart of the Nasdaq here in a minute, but you saw them prop that 14,750 area. At the end of the day, they like those every 250 points, tried to prop 15,000 and then 15,250 and then 15,500, and it comes to 14,750 and it bounces. Typically those don't work so well, and typically they don't trade it that well, that consistently, but lately that's just been kind of the every 250 points in the Nasdaq seems to be some sort of strong support level, at least in the short term. In the after hours you can see it breaking down that 14,750. Always feel a bit robbed when you're short and it props up, and then you get out and then it sells off in the after hours or overnight. That happens a lot. And so let's look at the daily chart to see what we're talking about, those October lows. And you can see here the October lows are way down here. So if you compare it to bonds, not saying that equities are going to do what bonds do, but there was some correlation in the trend. October lows rallied, and then the Nasdaq has done this and come back while bonds is rolled over. So will the stocks do this? It's hard to predict, but something to look at, something to consider. We look at things like this to continue to justify taking both long and short trades. longs have been our main winner, and today short trades were our main winner. And so there's been a long season really since June of last year where it's been hard to short the market, and the market went up, then it had a blip down, and then it's gone, up during this time period. And even in periods where the market's down, a lot of that's overnight, and a lot of it's volatile, very choppy downtrends, very tepid, choppy downtrends that are hard to short. And so there should be a season. There's typically a season for longs and shorts and different days of the week, and those mean revert when it gets too imbalanced in one direction. When one thing's been working too long or longer than it should have, usually there's mean reversion and there's a big move. And we talked about selling into the end of the day, and we got a little bit of that today. It went against us, a little bit at the end of the day, but on the Nasdaq, but went our direction on the S&P. Let's look at the trades on the day. And I say all this to point out how, just to continue to justify what we're doing, we do a lot of discussion, do a lot of market analysis, and look at cycles. We've spent years in QE since 2009, and a lot of the patterns that have occurred since 2009 were not patterns that worked before 2009. Now that QE is over, there's still some spillover effect, but I anticipate that the QE effect will roll over eventually, and catching falling knives and buying dips won't always work. And so you have to be able to take both sides of the market as a short-term trader. And adaptive moving average did that today, up 21.75 on the S&P. And so the S&P had some nice gains today. Let's look at tick pulse. Also nice short on the day. This one was up 16.1250. The SR counter trends plus 575, plus 575. So 4 winning strategies right there. Opening chop down minus 375. Opening chop 2 was down on the day minus 687.50. Take count trend dynamic turnaround was up 775. And so 5. I'm showing 5 for 7. 1, 2, 3, 4, 5, 6, 7. 5 for 7. And the long trades lost, and the short trades were all profitable today. So 5 for 5 on the shorts, 0 for 2 on the longs. The S&P downtrend was smoother. Nasdaq downtrend was a little bit choppier and tricky. Viper lost on the day, minus 12.25. You get that end of day EVP trade won't follow through, and you can see that hold up right there. And then you see tick pulse got short here. The tick pulse on the ES worked. But the tick pulse on the Nasdaq stopped out, had to get back in. Still up on the day, plus 780. Tick count trend. First trade was a loser. Second trade was a winner. Could have used a bigger profit target on this trade. That was a nice entry point. Could have held that one into the close. Minus 50 on that. Tick reversal. You see what I'm talking about here. That end of day prop up, and the exit time was just at the worst time of the day. Sometimes that goes for us. Sometimes the market will sell off and we exit and then it rallies. Sometimes the cycle is against us where it goes up and we exit and we get such a small gain on this trade. Only tick reversal was up only 135 on the day after all this, and then it sold off. And so and then OPV and Q plus 797.50 up on the day, mag 7. This counter trend rally stops out shorts and creates long trades. So the Nasdaq can do that some more. And there's not a lot of follow through on the up or the downside. Based on what we've seen the last few years, very narrow ranges. Minus 2,500, mag 7's been the dog the last 2 days. And momentum reversal, minus 1225, 3 days in a row of losing on that. That was a strategy that it trades much differently than the rest of our strategies. Has been a good bailout strategy and trade of the day, but the last 3 are down on the day. So those are the trades on the day. If we talk about drawdowns on a buy and hold, and you're talking about the Nasdaq 100, November the 22nd, 2021 was the last equity peak. So we're in November of this year. That will be, unless it makes highs by November of this year, that will be a two-year drawdown from its equity peaks. And so, and it's currently in a 9% drawdown off of this point right there. And so that's the buy and hold comparison. So these are the trades on the day for Thursday, August the 17th, 2023. Looking forward to Friday's trade. See if we get some more favorable price action, similar to what we had today, and potentially even more favorable and less chop on any downtrends or up.
Hey, David Bean here. Welcome to Capstone Trading Systems YouTube page. Be sure to subscribe to join our community of algorithmic traders. We are real money traders. We share our winning streaks, we share our losing streaks, as well as market updates, strategies, and coding tips.